A very good evening and a warm welcome to Personal Finance. I'm Gugulethu Cele. Now, if you were an accountant, would you try to do your own plumbing, service your own car, or prescribe medicine? Of course not. Then why do you feel so differently about your finances? And why not get yourself a financial advisor? Well, in studio to help us understand the importance of having a certified financial planner and advisor conduct your money plan is Michael Kirkpatrick, who's the Business and Distribution Enablement Specialist at Alexander Forbes. Good to have you with us today, and thank you so much for making time, Michael.
Oh, thank you for having me.
It sounds like something that is always part of a critical conversation when it comes to your efficient financial management, that you go to a doctor when you're sick, you see a plumber when you need to fix your pipes, see a financial advisor when you need to fix your money problems, right?
Yes, and so many people think that they can run with this do-it-yourself model. It is good to a certain extent. There's a lot of information out there in the market, and people can get access to their investments, insurances very easily without the use of a financial advisor. But when you really need to have some of that guidance and coaching along the way, that's when an advisor really shows their value.
First things first, we talk about these advisors. Where do we actually find them, and how do you make sure that they are accredited?
So advisors, you'll find them at most of your financial institutions and insurers. There is a distinction between more of your brokerage type advisors that would be very much tied to a product supplier. And then there's the financial advisor that's more whole of market, that can look across different product providers and give you the best solutions available.
Speaking to a lot of consumers, though, we often hear that they don't trust them, or they've had bad experiences with financial advisors. Perhaps if you could speak to one of these individuals who's watching today and emphasize just once more why it's so critical you need a partner in handling your money issues.
I do understand that there are people in the industry that are maybe unscrupulous and that don't do the best job for their clients. But if you do find that individual that speaks to you and helps you with your affairs properly and gives you value for what you're paying for, stick with them.
Exactly, and that takes us to the broader elements that advisors can help with, because it's one thing to budget adequately, but there's risk elements that you need to be aware of, investment options too, right?
Yes, and I'd broadly look at your advisor's job as looking at your risks from an insurance perspective, and then looking at the goals and objectives that you have from an investment point of view, and then giving you the solutions to meet those objectives and goals, and lastly, helping and coaching you along so that you don't fall off that path to your goal.
Let's talk about those goals and objectives, and in particular financial milestones that need to be achieved, because they differ from someone my age to my mother who might be nearing retirement. So let's start off with individuals who might be in their 20s. What do they need to be cognizant of?
So in your 20s, you're just starting work and you're getting a little bit of money, and credit agencies are starting to bang on the door for you to start taking that credit, spending it, so you get caught up in this pool of loans that aren't necessarily the best thing for you.
What if someone says, but you're building up your credit profile here, Michael?
I 100% agree. Your credit profile is incredibly important. Now, there are things as good credit and bad credit. For me, your good credit is against things that will appreciate in value over time. So, a house, for instance. Bad credit is on consumption-based things. So, if you're taking out credit for clothes are not going to add any value to your life in the long term. And unfortunately, with people in their 20s, a lot of the time they don't have the prerequisite knowledge on how to manage those debt situations and arrangements.
True.
And they tend to fall into a lot of debt, and it becomes very difficult to get out of that. And I refer to it as almost like a wealth destroyer. And too much debt, people then don't have that ability to build up long-term savings if they get caught in that trap. So for me, someone in their 20s needs to be very well aware of that and set that foundation for themselves, that they don't take out a lot of credit, as well as looking at protecting their human capital. So human capital being the ability for them to create an income and work into the future. And the best thing to do for that is protecting with some sort of disability insurance, so that if you do become disabled, you have something to fall back on. Again, from an insurance perspective, if you have a car, especially if you utilize it for earning an income, you need to have some basic level of short-term insurance on it. So for me, for someone in their 20s, just as long as you have those basics, you should be okay. Not mentioning medical insurance as well, but
exactly, and also establishing that savings pot for short-term and medium-term challenges, right?
100%, because what we see is that if people don't have that little bit of savings to absorb a shock, they tend to fall into debt again. So it just creates this perpetual cycle of falling into debt.
What about individuals who are in their 30s and 40s? There, your lifestyle is changing slightly. You might get married, you might have kids, start looking at retirement savings a lot more seriously now. Talk to us about some of those dynamics there.
Oh yes, and unfortunately, there's a lot of scarcity in your resources then during that stage of your life. So that people tend to not put as much towards savings and long-term savings, and rather spend their money on very important aspects of their life today, like their child's education. But in that, we also have to take into account cultural or differences in culture, because a lot in the African and Asian cultures, there's a big push towards education over retirement savings. But a retirement provision is that your kids are going to look after you in retirement.
I get you.
So that is something that needs to be played off, as well as when you start having a family, you need to start protecting them more. So if something happens to you, you need to ensure that there is sufficient insurance available to look after spouse and kids, especially if your spouse isn't working, if you've got older dependents on you. There are a lot of elements at play, but you tend to need to be looking towards that longer term financial prosperity, if you could put it that way.
Exactly.
In your 30s and 40s.
You're quite right. And that's also the age group, I understand, where some people might get retrenched, or they might be under financial stress and decide to cash in their pension funds, thinking that they have some years as well to continue catching up there. So preservation is always something that we preach, right?
Yes, definitely. And I always look at a retirement fund as something that you try and never, ever touch. It's the last resort. And yes,
True.
If you have to tap into it, you have to tap into it. You need to live today. It's the reality of the situation. But as long as you can keep it at bay, you keep it at bay.
Exactly. But Michael, if we also take a look at an opportunity for individuals in their 50s and 60s, a lot closer to retirement here, and given the fact that the outlook is that individuals might live a lot longer, how do they balance their needs and making sure that there's enough in their kitty, but might actually want to continue working or looking at other alternatives?
Yes, and unfortunately for the people who want to retire, the answer is probably that they're going to have to work a little bit longer.
Wow.
When you start looking at that longevity risk in your retirement capital, or your income needs being greater than the amount that you built up as savings. And I'm not saying that it's full on work into your late 60s, but it's to try and supplement that. So whatever little bit that you can add to that income pool at the end of the day will help. And you will also need to, or potentially need to, rely on some of your family members as well at that time. We live in the sandwich generation, where we are going to have to be helping our parents potentially and helping our kids. It becomes very difficult, and there's a strain on those resources within a family unit. We're just going to have to look at more effective usage of that going forward.
Precisely. Well, we've said quite a bit. Let's get a quick recap now, some of the takeaway points from tonight's discussion. Michael, coming back to some of the major themes that we've pointed out in tonight's conversation, the relationship with your financial planner throughout all the ages, from your 20s right up to your 60s and even beyond. What are the critical discussions and critical themes that we need to bear in mind in seeking that partner, being the financial advisor who hold our hands on this money journey?
I think it's someone that you are very comfortable with in the longer term, and someone that will develop your general knowledge of finance going forward, so that you are able to make informed decisions and are aware of those outcomes at the end of the day, whether it be investments, insurances, budgeting, structuring your goals and objectives going forward.
Fantastic. Thank you so much for your time today, Michael, and providing us with these guidelines as to how best to find that advisor and maintain the relationship with them. Well, that's how we wrap things up for Personal Finance tonight. A big thank you once more to Michael Kirkpatrick, who's the from the Business and Distribution Enablement Department at Alexander Forbes. Now, do remember that we want to hear more of your stories and your personal money journey. So tweet any of your comments or feedback to @CNBC Africa using the hashtag Finance410, or to myself @Gugulethu. Until next time, have a wonderful evening.